everybody, it's Nick Groves here with Trading Analytics, and today we're going to be talking about what's coming up this week. We actually have a lot going on. So on Wednesday, we have ISM, we have JOLTS, we have the Fed speaking on their interest rate decision, which, I think we all kind of have a feeling here that it's going to be left unchanged, but it is interesting given how far we've come. I think I took this screenshot back in March. We've gone from 5 or 6 cuts down to 1 or potentially none. So, but really what's going to be interesting with that is how he comes out and speaks. You know, is there something in the rhetoric where he gives the bulls a little bit of a boost? Maybe not, because right now it just seems hawkish. But aside from that, we do have non-farm payroll on Friday as well, which is always a pretty big piece of data coming out. And I noticed we're expecting 243,000 jobs, which that's pretty high. I think the highest since then was in October of 2022 with 250,000 jobs expected. But we've surely been creating quite a bit of jobs, so we'll see if we can keep that hot expectation coming in. But let's take a look at the S&P, where we're at. So I'm starting to view, this is the S&P futures contract ES. I'm starting to view this as a bit of a triangle. If we can get back above resistance here, I think we actually stretch somewhere towards 5,200 in the ES. I think that's roughly 5,150 or so in the cash market. But as you can see, we're right near the 50% retracement from the highs to the correction lows. Are we just going to roll back over? I'm not entirely sure, but looking at the daily candles, I'll show you this. This looks like an indecision candle to me, certainly. And we're also on resistance from the cash. So you can see we've had a few tags here. Are we going to turn from here? It's entirely possible. And if we're going to take out these lows here around, 49.60 or so, I think we're actually going to revisit the 48.20 level. On the flip side, though, we haven't even came down to 38.2. This is a giant bull trend. We've pulled back 5%, and we could be on our ways back up towards all-time highs. And I'll go and show you guys my continuous contract on the S&P here. So yeah, it's around 51.50. I think this is a possibility. What would cause that? Well, the Fed leave rates unchanged as expected, but maybe Fed Powell slips in something a little bit, dovish. Jobs come in weaker. People start to assume that we're going to get a cut from the Fed, and all of a sudden we're trading up near 5,200. And what else could help that? Well, earnings. We have earnings this week. We have Amazon after the close, and we have Thursday. Well, we always have Thursdays, right? We have Apple after the close on Thursday, which is going to be a big mover. Apple has been such a weak stock this year. I think second worst to Tesla, and I'll cover Tesla here in a minute. But what's interesting is that if you take a look at Apple, I was looking at it as somewhat of a double top that looked like it was on the verge of playing out, but it managed to hold its own and get back above this support line, and it's now near wedge resistance at 174. You'll also note that there's some bullish divergence here on the RSI on the 4-hour. That's a positive for Apple. Now, ahead of big data, like earnings, like the Fed, like non-farm, you tend to expect the general market to be somewhat mid-range, and you would expect the same out of Apple ahead of its own earnings. I think 170, if we fill this gap here, 170 to 180 is mid-range for Apple. So let's see how it reacts. I'll certainly be updating you guys on Twitter, Trading Analytics with an X, as we walk through this week. But let's also recap a little bit. Facebook. What a move we saw on Facebook last week. I think what made the move so exacerbated is we fell straight into this gap that we created in February, and we just filled it. We tagged the 618. Now we have a new gap. So I think resistance is going to be at 474 and obviously supports at 413. For now, it's likely to consolidate. We're just going to have to see how it reacts on a break of the highs or the lows, and we'll be updating with you on Twitter for that. As far as Google goes, I tried to give a heads up on Blake's week ahead video that I think we're at resistance. So on Friday, we closed up 10.22%, but from the highs in 2021 to the lows of 2022, we came up to this 127% extension in Google. We came up to channel resistance, and on the daily RSI, you'll note that we are, overbought. So I think it's likely that we do come down and actually close this gap here at 160. It's just, even despite the correction in the general market, Google did not flinch. So now it might be time for it to flinch just a little bit. Covered Apple, Amazon. What's interesting about Amazon is that it actually already kind of corrected ahead of its earnings, which is good. Kind of got that out of the way, unlike Facebook, which just face planted after earnings. But it came down to the 50% retracement of the 2024 range. It's back above this channel resistance that's held. We were in this channel for most of 2022 and 2024, so it's back in this, back above it, I mean. And support's going to be the trend line support at 175. Below there is going to be the spike low at 167. But for now, it looks kind of bullish to me. Would not be surprised to see it all-time highs, something similar to Google after earnings. Earnings have been a fun one to watch. I mean, what about Tesla? I actually closed out my Tesla long. I was long from 147. I kept you guys updated on that on Twitter. We closed above, once we started, nickering back above this wedge support and then got up to the wedge resistance, I had a feeling we were going to pop towards 180 to 200. Did just that. Now it's right near the 50% retracement here at 201. Also 200 being a big whole number. I would imagine that offers some solid resistance. So I got out, took it from 147 up to 197, called it a day, and now it's back to paying attention to what it wants to do next. I think support's going to be on a gap fill of 172, and above here, somewhere around 220, I think would offer as the next level of resistance if it can clear above here. Now let's talk about Nvidia. Nvidia is obviously, the big kahuna in the market. It's been the talk of the town this year. It managed to close above the 50% retracement from the highs to this correction low, and also close above trendline resistance. And we saw today it come back and perfectly tag that trendline support now, former resistance, and it looks like it could be back on bull. I mean, semiconductors have been a huge driver in this market. If you take a look at the SMH VanEck ETF, we pulled back perfectly to the 38.2 fib, the continuation fib, and it is just, it looks like it's continuing on higher. And it should drift the market up with it in the event that semis are going to continue to run. Be careful if we get somewhere back above 225 is where I'd start to be a little bit hesitant. Now, given how strong this market's been, but also starting to feel like there could be some cracks coming, take a look at the VIX. This is what I'm going to leave you guys with. The VIX, I've been watching it all year. It's made, higher lows pretty much the entire time. And what's interesting from a weekly perspective is I think RSI is pretty much held, daily RSI is pretty much held above 40 really this whole year. This dates back to December of 2023. So it's spiked up. It's came back. I think there's a 618 retracement from the lows here to the highs. Let's just check it out. There's a 786 right here at 14.3. This could be a range if it wants to continue the trend of RSI being supported down here. Look for, if we squeeze up to 5150 in the S&P and the VIX is down near channel support around 14, could be an interesting level to watch for the market to turn back lower. So with that, I'll leave you guys. But really, it's going to be a busy week. Don't forget to check us out on Twitter at Trading Analytics. And I'll be back to update you all shortly. Thanks so much.